Welcome back again. In our previous video, we started to look at calculating our opening capital by using the statement of affairs and using our accounting equation. Capital is equal to our assets minus our liabilities. And we also started to enter some information into our bank account. And when we were entering the information into our bank account, when we look at it, we knew our opening balance for our bank was $30,000. But based on the question, we didn't know how much money we received from our credit customers, so we put a question mark there. We also knew that we paid administration expenses of $13,700 and sales and distribution expenses of $11,100. So we knew that we paid these expenses, and so we were able to enter those because that is what we knew. However, we didn't know how much money we paid our creditors, so we placed a question mark there. And based on the question, we didn't know how much drawings Mr. Bond took, so we put a question mark there. But what we knew as well from the question was that our closing bank figure was $15,000. The opening bank figure is $30,000. So we knew that our closing bank was $15,000. Highlight our expenses that we knew as well. Administrative expense, sales and distribution. We don't know our drawings. Neither do we know how much money we received from our credit customers. Nor we don't know how much we paid our credit suppliers. But what we can enter is our closing balance for our bank. So let's enter that figure, $15,000. So what we're going to do, we're going to move on to our step 2 and then come back. We're going to move on to our step 3 where we're going to calculate our sales and purchases. And this step is usually done by using the control accounts or by using the markup or margin if given. So remember I stated earlier on that you can only use the control accounts if you have enough information that you can put into that control account with respect to the opening balance for your debtors or creditors, the closing balance for your debtors or creditors, and how much money you would have paid your creditors or received from your suppliers. Therefore, leaving only one missing figure in that control account, which would then be your credit sales or your credit purchases. However, if you have more than one missing figure for your control account, in this case we do, because we do not know our credit sales, neither do we know how much was paid to how much we received from the customer. So those are two missing figures, so you cannot use the control accounts for your credit sales. Similarly, you cannot use the control account to calculate your credit purchases in this instance because you do not know how much money you paid your credit your credit suppliers. You do not know how much money you paid your credit suppliers. And secondly, you don't know your credit purchases either. So therefore, you cannot use the control accounts in this instance. So what we are going to be using, we are going to use the concept of markup and margin to work out these figures. Why we're going to use that concept? Because the question states here in C, the gross profit was 30% of our sales. So they're basically telling you whatever your sales figures, whatever your sales were, whatever James Bond's sales were for the financial year, his gross profit was 30% of those sales. So let's make some notes here, right? We're going to make some notes, some quick notes we're going to make. So what it is we know, right? We know that margin is 30% of sales. That's what we know. What's the other thing we know? We know here in B, they said the cost of sales for the year was $91,700. Remember from my introductory video, we would have stated that markup is associated with cost of sales or a cost price, whereas margin is associated with sales or a selling price. But here they didn't tell us what the sales were, but they tell us that our cost of sales were $91,700. So they're giving us margin and they give us cost of sales. So we want to then find a markup so that we can calculate our gross profit based on this cost of sales figure that they would have given us here. So this is another thing we know, that our cost of sales is $91,700. So let me make a note of that. We know that cost of sales or in other words, your cost of goods sold is $91,700. So that's what we know. So because we know our margin, we know our cost of goods sold, so we know costs. What we do not know markup. So we do not know markup. So we do not know markup. So because we do not know markup, what we must do then is to convert from the margin that we know to a markup. So we must convert from margin to markup. That's what we have to do. So we have to go through a conversion process. Okay? So we know that our markup, our margin is 30%. We know our cost of sales is $91,700. So we are going to convert this margin to a markup. So margin is equals to 30%. And based on what we would have stated previously, we said if you want to convert from a margin, and that was in our introductory video, we said that if you want to convert from a margin to a markup, you will put the 30% that was given to you over 100 and subtract that 30%. So the markup will be equal to 30% or divided by 100 minus the same 30% that was given. Therefore, our markup then will be 30 over 70, and then that is multiplied by 100. Okay, so let's see what our markup is. 30 divided by 70 multiplied by 100. Our markup, it has a lot of decimals behind it. 42.857142286%. So we can round that to probably about 43%. So our markup would be 43%. So let's say that our markup is 43%. Okay, so 30 divided by 70 multiplied by 100, 42.85%, and we round it to 43%. So I'm rounding it to 43%, and let's see how we go from there, and or see if I need to use all of my decimal places to get exact figures. So now that we know that markup is 30 on 70, we can calculate our gross profit. Or now that we know that our markup is 43%, we can calculate our gross profit. And I'm going to use, instead of just the 43%, what I'm going to use the 30 on 70. And instead of going all the way, so that I'm going to use 3/7. That's what I'm going to use. I'm going to use 3/7, 30 on 70. When you divide 30 by 70, you will get 3 on 7. So I'm going to use the fraction 3 on 7 or 30 over 7 instead of using the 43% because we will need to use all of our decimal places. So if we can use the 30 on 70 or we can use all the decimal places. That's what we can do, right? So you can use the 30 on 70 or you can use all the decimal places that you would have calculated for your markup. So we know, so now that we know markup is 30 on 70, we can calculate gross profit. And this is what gross profit will be. Our gross profit would then equals to our cost of goods sold or cost of sale, which is $91,700 multiplied by the 30 divided by 70, which is equals to, so 91,700 multiplied by 30 on 70 is $39,300. So $39,300 is our gross profit. Okay, so we are moving along smartly because now we know gross profit. We can calculate our sales because we know gross profit now. We can now go ahead and calculate our sales by working backward to calculate our sales. So now we know our gross profit is $39,300. We can calculate our sales, okay? Because we know that because how we can work backward and calculate these figures, if you know the setup of your income statement, you know that your income statement and from previous accounting concepts that were taught, you will know that your gross profit is equals to your sales minus your cost of goods sold. That will give you your gross profit. So if sales minus cost of goods sold will give me my gross profit, then my sales will be equal to my gross profit plus my cost of goods sold. So gross profit, so let's look at that one. Gross profit is equals to sales, and this is what we know from previously being taught. Sales minus cost of sales or cost of goods sold. So if gross profit is equals to sales minus cost of sales, therefore sales will be equals to gross profit. You're just transposing the equation plus my cost of sales. So now I know my cost. I know then that my sales will be equals to then my gross profit is $39,300 plus my cost of sales, which is $91,700. So my sales so that would be $39,300 plus $91,700 gives me $131,000. So my sales are $131,000. Okay, and remember that we are coming from previous concepts that were taught to help us to calculate our sales figure, because since we know our gross profit, and our gross profit is basically our sales from previously taught, sales minus cost of sale equals gross profit, then it is safe to say that our sales will be equals to the gross profit plus our cost of sales, and we